Hi, today's review of the S&P, I'm going to go into detail on some trade setups that have taken place. There's a couple different ways to try and play in the market, and I'm going to show you a shorter term version today. I've given you some bigger picture patterns, and I've given you some swing trading ideas. It's been a little while since I've actually shown, detailed description of intraday patterns. And I'm going to display it in a slightly different format that I think some of you guys are going to like. So let's get into the charts and look at what's taken place. The monthly chart has not moved a whole lot, or I should say hasn't changed a whole lot from the last time we did this. It continues to grind higher, and I would consider it grinding. And my reason is that the market really isn't running on all cylinders right now. If you notice, there are days this week where the financials and the industrials are up big and tech was actually down. And then there are another day where tech was up and those were down. So it's the type of situation where, one sector's up in lieu of another as opposed to all of them working together. And that's when you get this type of price action where it's just sort of a grind. Now, it is going to the upside, so the bias is to the upside. And the weekly continues to push higher through these key lines. It worked through the 18-week. And now it's kind of working its way through the 3,000 level and the 40-week. Now, it hasn't closed the week. So if we have a poor day tomorrow and close back down below 3,000 and below the 40, you'd almost have to consider that to be a little bit of failure there. And maybe we end up forming a little bit of a range off that. So it's something to keep in mind. The daily chart is, again, a good example of something that just continues to grind with a lot of gaps in here. If you look at what's taken place, I mean, there's gaps all over the place. And I'm going to go into detail on some trades as to why, it makes it difficult if you're trying to do any kind of a swing trade that lasts anywhere from, a day to 5 days or even a couple weeks. So let's zero in on the hourly chart because I wanted to follow up on what we talked about the last time, which is I mentioned that I have this arrow pointing to essentially the last trade setup, which was, let me go back to the daily real quick for just a second. There was we took out this level. Let me make that a little bit bigger so you can see. We took out this level. That is basically where on the hourly this horizontal line is coming across. So, and where the arrow is pointing. Now, what I didn't like about it, there wasn't much follow through. And in the last video, I said we're getting a little bit of a zero line, potentially a zero line reversal pattern developing. And so, the problem is if you see what happened, look at where you actually triggered the zero line pattern and you got a buy signal. It was via a gap to the upside. And so the question is, how do you try and take advantage of that? Let's say you were in on this trade and you decided when it re-entered this breakout area you wanted to get out. And then you'd re-enter if it came back above. Well, in this situation, you had a big gap to the upside. You really kind of left with, what I would not, I would not be a buyer on this gap up. I would want to wait for some sort of a setup. So I'm going to go into a little bit of detail as to how I would handle this. And a lot of this goes to, I'm going to switch to TC2000 and give you it's a little bit different simply because I'm showing on the bottom right, I've got the daily chart, but I've only got a little bit of history there. And then upper right, I've got an hourly. Upper left, I've got a 10-minute chart. And down on the bottom left, I've got a 2-minute. So I'll explain that in a second. One thing I just wanted to cover real quick are kind of your three choices right now in the type of environment we're in. Your first choice is to move back your time frames, use higher time frames, look at a monthly, weekly, daily combination to try and find and identify patterns and try and hold them a little bit longer, give them a little bit more room. That strategy has been working. It might not seem like, it's a smart way to go, but there have been some huge winners in individual stocks that have been taking place. So that's one strategy that's always out there if you have a good way of implementing it. And again, if you look at I give you some of those in my book, Invest Like a Pro. If you go to the second choice, which is using options for swing trades, I don't know that I'd want to be doing swing trading right now. Based on what's taken place with all the gaps and everything. I mean, you can see gap up here, another gap up here. There was a gap down the other day, so, with all the gaps taking place, I think it makes it really difficult to make money, or you know what, you might make money, but I think you're taking a lot of risk to do it. So let's zero in on how this played out. And when this gapped up here, you have a choice. My choice and the way I trade is I'm going to wait for some form of a pullback to take place and look for support at the 18 MA on the hourly. And if you notice, if I click on here, you can see right where the 18 is also this support area right here. So when that coincides, when I get a pullback to the 18 MA on a specific time frame and there's price support right there, that's usually a pretty good spot, a pretty good zone to be looking for a trade. If we go down to the 10-minute chart, you can see that at that point, that's basically right here, right in this zone right here. You're coming into the 18-week, but there's really not much of a signal taking place. So I'm going to go down to a 2-minute chart, and I'm going to show you how I kind of look at all three of these time frames: the hourly, 10-minute, and 2-minute, all at the same time. I've got these bigger lines, this red line. And I'll do this, and I'm going to switch over and give you a zoomed in look of this 2-minute chart. But right now I want to show you, see this red dotted line that's moving up here? If you notice, right there is exactly where the 18-month moving average is. I'm sorry, the 18 MA on the 60-minute chart. So if you look at that and you say, okay, that's where support is, I'm showing it on a 2-minute chart. And let me show you how I've done that. I've got a 2-minute chart here, and what I have done is, and you can do this on pretty much any trading software that gives you any sort of trading history on the intraday time frames. I've got the 18 MA in magenta, like I always do, and light blue is a 40, like I always do. And then I've got these dotted lines. First, the dotted line in blue, and that's the 18 on the 10-minute. And what I've done to create that is I've taken the 18 MA on the 2-minute chart, and then I've done this calculation. Essentially take the next time frame and divide it by the current time frame, and you get 10, which is the next time frame is a 10-minute chart. Current time frame is a 2-minute chart, and that's 10 divided by 2 gives you 5. You multiply that by 18 and you get a 90 MA. So the 90 MA corresponds to the 18 MA on the 10-minute chart, and I'm displaying it on the 2-minute. I hope that makes sense. And then I did the same thing with the higher time frame, which would be the hourly. And by doing the math and moving forward, I know that it's a 540 MA on a 2-minute chart. So what I've done is I've created a single chart. And if you need to save room sometimes, this is a really good strategy, is to have, I've got my 18 and 40 for my triggers and my setups on the trading time frame, which is a 2-minute. And then I've got the higher time frame, or the next time frame, which is a 10-minute. And then I've got the really high time frame, which is very important for intraday trading, which is a 60-minute. And I use the 18. It's a very important line for me. So these are key criteria, I think, to watch. Now, once I go down to this time frame, there are some interesting things that have taken place. So you still want to do the same type of strategy, which is you draw your trend lines in. So an aggressive entry would have been after the gap up, and you work your way down, you come into the 18 on the hourly. The 10-minute really isn't in place yet, but I noticed by drawing in my trend lines, I had a 1, 2, 3 developing. So you break the trend line, come down and test, and then as this is moving up, So you really have a 1, 2, 3 change in trend developing with entry as this is coming back up. If you notice, the 18 on the 2-minute is crossing back above the 40 on the 2-minute. And so that's somewhat of an entry I think you could take before breaking above this peak. You still want to use a stop below this low here, which happens to be the 18 on the hourly, which is a good spot, I think, to put a stop in place. And so you could look at this as a trade that you want to take off the hourly, but you're getting in off the 2-minute chart, the 2 minutes reversing for you. So I find that kind of interesting. Now, if you look at what happened later, you had a zero line reversal pattern that took place where I would look at this and draw in my trend line. Let me just put this in. So the trend line would have actually been taken out on this bar right here, and that would have coincided with the turn up from the zero line on the MACD. So at this point, I've got a rising 18-month, a rising 18 on the hourly chart. I've got a rising 18 on the 10-minute chart, and now I'm getting a trigger, a zero line reversal. Again, this is out of my book, that is triggering right here on this opening bar. So I'm sorry, this bar here, right, it was right around 2 o'clock in the afternoon. It was a big, strong bar to start the afternoon. And that led to a pretty strong move to the upside. This is a good strategy for going down to an intraday time frame, being able to see a 10-minute trend, an hourly trend, and then following the triggers off the 2-minute. I don't typically like going down to a 2-minute, but the only way I'm going to do it on a 2-minute chart is if I know I'm working in conjunction with the higher time frame trends, which mean on an intraday basis that would be the 60-minute for me and the 10-minute for me. And then I can go down and look for the signals based off the zero line reversal, different patterns. Here, this was a zero line cross and pullback, and that happened to coincide with the 1, 2, 3 change in trend. So these are all interesting patterns that can develop if you're looking at intraday time frames. And there were some pretty big moves, pretty good money that was made. If you did this trade here, your stop goes underneath this low. I mean, the risk reward on this trade would have been pretty substantial, even if you closed it out at the end of the day, which is what I would recommend for most intraday trading. I would not be looking to hold them overnight. Hope this was helpful. Please hit the like button, and we'll talk to you soon.